If I were starting my investment journey today with just $1,000, here's exactly how I'd approach it to build long-term wealth. Starting your investment journey doesn't require a fortune. $1,000 is a fantastic starting point to plant those initial seeds of financial growth. This $1,000 isn't just money. It's a powerful launchpad for learning, growth, and harnessing the magic of compounding. Before we dive in, please remember, this is for educational and entertainment purposes only. I'm not a financial advisor, so do your own research or consult a professional. Before investing that $1,000, we must ensure your financial foundation is solid. This is non-negotiable. First, ensure you have an established emergency fund. This liquid cash prevents you from selling investments during a downturn if life throws you a curveball. Second, if you have any high-interest debt like credit card debt, that $1,000 should go there. The guaranteed return from avoiding high interest often beats market returns. Once the foundation is set, the first practical step is opening a brokerage account, which is your gateway to the stock market. I recommend choosing a low-fee, user-friendly broker like Vanguard or Fidelity. They offer robust platforms and easy access to the investments we'll discuss. The account setup is typically straightforward. You can open a taxable brokerage account online and link your bank account to transfer the $1,000. For a beginner with $1,000, the best strategy is maximum diversification. You want broad exposure without the risk of picking individual stocks. Diversification protects you. If one sector or company struggles, the rest of your portfolio can cushion the impact. It's the only free lunch in finance. We are focusing on low-cost index funds or exchange-traded funds, or ETFs. These funds track entire markets, giving you instant diversification in a single purchase. Now let's break down how to allocate that $1,000 across just two high-quality, broad-market ETFs. I'd put $700, or 70%, into a total U.S. stock market ETF, like VTI or ITOT. This gives you exposure to thousands of U.S. companies, from large to small. The remaining $300, or 30%, would go into an international stock ETF, such as VXUS or IXUS. This ensures you capture growth outside of the U.S. market. Investing is a marathon, not a sprint. The most important tool you have is time. Adopt a mindset of consistency through dollar-cost averaging. Commit to adding money regularly, even if it's small amounts, regardless of market conditions. The market will go up and down. Resist the temptation to time the market or panic sell. History shows that time in the market is more important than timing the market. To wrap up, starting with $1,000 is powerful. Let's quickly review the steps. You'll secure your financial foundation, open a low-fee broker, and invest $700 in a total U.S. stock market ETF and $300 in an international ETF. Keep educating yourself and, most importantly, increase your contributions as your income grows. Happy investing!